Sie erwarten von mir als Politiker, wenn Sie die Initiative annehmen, dass ich
Now,
sie umsetze.
you expect from me as a politician that if you say yes to an initiative, I am going to implement it. Now, as a politician, I will tell you, I would first like to know what problem will be solved by the initiative. That's my question number one. Now, if you talk to the proponents and look around the website, you will agree relatively rapidly. The idea is to solve the problem of bubbles or misguided speculation. That's in simplified terms. I don't have a lot of time. Only, it's an open question as to why there are bubbles, why bubbles are generated. If you ask Professor Don Ariel of the Duke University, who conducts studies as to whether human beings always act in their best interests, you will find that we human beings are very irrational, and that these irrationalities are to be blamed for irrational things in the monetary system. And there are funny experiments done by this gentleman. You might be familiar with them. Now, I could provide evidence to anyone in here in the hall that you're irrational when it comes to money. So if you believe that human irrationality could be corrected by changing the money system, the monetary system, then you have either not understood how human beings function, or you have a paternalistic point of view, which means you will tell people not only how money works, but what they need to do with money. That's my first point. Second point, if we have agreed that this is the problem we want to solve, then you need to think about whether the new solution, the proposed solution on the table, includes more risks and problems than the existing one. So is the new solution better, considering the new risks generated? And here, in this regard, and that's very important, let me say that nobody is telling you that the current system is 100% accurate and correct. Nobody is saying this. All systems we have today come with their flaws and their deficiencies, be it social security, be it taxes. We do not have a fully perfect solution anywhere. But what I've found, historically speaking, is that human beings who say, well, they've got the silver bullet, usually end up in dictatorships and misery. I've never found anyone who was going for a silver bullet and didn't end up in dictatorship or poverty in the end. And I would like to emphasize on that. When you read the sentence, like we can deviate from the principle of economic freedom. That's a sentence in the initiative, and you will find it in the Communist Manifesto. You will find the same sentence. Now, let's try together with me and say you want to carry out an experiment with monkeys. There's two things you have to prove to be entitled to carry out the trial. First of all, you have to show that the outcome of the trial will not only lead to more knowledge, but will mean that this additional knowledge will be used for the benefit of humankind. That's the first thing. And the second thing is you have to prove that all other things that could be used to come up with this knowledge have already been conducted, and only then, once they have been done, can you do that animal experiment. And you haven't done either of this thing. The Ethics Committee of the Canton of Zurich would ban you, would keep you from carrying out this experiment on monkeys. And I would like to urge you to not carry out this experiment on human beings. If you see what green politicians say in Germany, they want Switzerland for an experiment, and I'm not ready for this, I'll tell you. I don't want to be an experiment in the international community. That's my first important point. I would like to decide myself. Now, the initiative was presented to you, and there's a lot of things I don't need to repeat. But let me say one thing. if you want to implement this, the text of the initiative says that at a certain date, no later than 2 years, once the initiative has been approved, all credit money issued and so on, you know that better than myself, will be converted into sovereign money. So this means three simple things, really. First of all, for all credit risks on that date, the national bank will have to be responsible, as it will take on all credit, all forms of credit. No, but it says so in your text. And secondly, the banks will have to pay back over an arbitrary transitional period. People talk about 20 to 40 to 50 years of transitional periods. Now, whether the banks still exist, that's why I'm saying the National Bank is taking on the risks. If someone has to pay back 20, 40, 50 years now, by the time I will be lying in the cemetery, I don't really care. And of course, you have to have a long transitional period. I calculated it for Raiffeisenbank. They would have to use all the money they cash in to pay back for 25 years. And thirdly, you're doing a monetary reform with an announced state. We haven't seen that anywhere in the world. Even the Indians, when they withdrew the 1,000 rupee notice, they didn't give 2 years notice. It was a very small reform, but they just did it from one day to the next. So that it means that you give the entire world, the entire financial communities, 2 years' time to think about that and to take up their positions. Do they want to speculate on the matter positively, negatively? So you are subjecting the Swiss franc system to global speculation, and that is what you don't actually want. Now, how will that speculation work? There's two claims you can make. And first of all, the first claim really is that the National Bank has very much trust all the money will be guaranteed by the National Bank. So Switzerland will be the only country to have a currency that is fully guaranteed by the National Bank, by the central bank, so a lot of money will go into the Swiss franc. And the Swiss franc exchange rate will go through the roof. The export industry will be faced with any number of problems. That's one theory. The other theory is, well, people saying, what a stupid experiments the Swiss are doing. The Swiss franc is going to lose significance because you can do everything in euro, denominated in euro, dollar. Then you cannot ban that. And I can convert my company to dollars within 2 days. So the Swiss francs will lose any kind of economic relevance because everyone is going to convert into dollars or euro. The Swiss franc is going to collapse. I'm not saying one or the other theory is correct, but you will find speculators that will bet on solution 1 or 2, and both of them, either of them is not good for Switzerland. Both of them are not good for Switzerland. And then let me say something in my capacity as an entrepreneur. Maybe I'm somewhat cheeky about this, but I think that the proponents of the initiative have unlimited trust in politicians, and you'll give us so much legal leeway of implementing it. It's very nice of you. But I am a politician and I would never give it to myself. I would never give so much leeway to myself, so much freedom to myself. What does it mean? What are the farmers' representatives and tourism representatives and construction industry representatives going to demand? What are the trade unionists going to demand? Well, we will be faced with a great deal of demands, and in my opinion, if you want to approve this initiative, the money system, the monetary system, will perhaps become a political issue. Agricultural credit will have to be extended in a different manner. And I am familiar with those political games. Look at how certain projects are solved in Bern. So it will be lobbying policy, entirely lobbying policy. Now, whether this will lead to more confidence and trust in the Swiss francs internationally, I would put a big question mark to it. Now, in my capacity as an entrepreneur, I'll tell you, I need credit. If I, as an entrepreneur, want to get credit, I need to provide collateral. And in my life, I've never been given a credit without collateral. So what you present as money creation may not be money creation at all. Either I will have to transfer maturities, money that I'll get tomorrow, I'll get as a credit today, or I'll have to provide capital as a collateral to get credit, to obtain credit, and if I'm lucky enough, I will get some additional credit without any collateral. So as an entrepreneur, I have to provide assets as collateral, and I'll get money for it, credit for it. Now, there will be an assessment of how substantial the assets are in value, and that's a risk trade-off. If, for instance, the Swiss Rail is my largest client, then the default risk is relatively small. But if I provide collateral, my largest client is the University of Basel. It may also perhaps be a small risk, but if my largest client is, I don't know, Glencore or whoever, it may be a larger risk. But so somebody will have thought about what the underlying risks are, and they give me money for that. And if they miscalculate, I'll go broke and they lose their money. So maybe I'll get a bridging loan to survive, but that's it. And so the question is, who is going to carry out these credit assessments in future? It's got to be the one who bears the risk. And if I am the one who bears the risk, I'll have to assess the credit worthiness. And if it's the bank, it's the bank that has to assess credit. And if it's the national bank or the central bank, it's the central bank. But your system is proposing that there be money creation flooding somewhere to the state without any interconnection to the credit assessment. And if these people then really feed back their money to the Swiss business system, it would have to be a closed circuit really, and then I'd be lucky enough for the bank to give me the credit, perhaps, but perhaps the National Bank would have to resort to the emergency provisions, and you put it in the initiative because you're aware that it might not work. So there will be enormous political pressure created for Mr. Noser to get his credit as a person running a small business. Now you need to define how much credit is required, and if value creation is done through the state, it doesn't necessarily mean that my bank gets the money to give me the credit. You haven't closed that circuit. You close that loop because you would need to have entire capital controls, full capital controls against the outside world, and we cannot do that. So as an entrepreneur, I wouldn't want to be dependent on politicians to tell me whether I'm getting a credit or not. I prefer to be dependent on my performance, and I would, of course, rapidly take a position in the Eurozone to make sure, or in the dollar zone, to make sure to get the money I need. And what you also need to know is that you can tell us, well, transaction accounts are to be managed off balance sheet, but you will have to find someone who will do that free of charge. So, of course, the SNB, the National Bank, will offer transaction accounts, but certainly not for free. You would have to pay for it. Today, as a company, I get all payment transactions virtually free of charge, and in future I'll have to finance it. That's the situation we're going to move into. We will have a payment transaction systems that separately, but that will have to be financed separately, and you have to explain it to the customers why a transaction suddenly comes at a price of 10 francs rather than 0 francs. Everything will have to be settled because nobody is going to make money anymore on payment transactions, and the credit system is fully separated from it. And if it's fully separated, you cannot have cross-funding, and if there's no cross-funding, somebody has to pay for payment transactions, and the users will have to pay for that. And at the end of the day, it's all of us who are voting on the referendum.